I'm just going to give you a broad sort of introduction to IIC, for a couple of minutes and talk a bit about the research pillar and the work we do there. And then I'm going to hand over to Varun and Vedant to actually take you through some of the, summary, pointers of the report. So just IIC, just for the benefit of some of you who may not be knowing about the company, we are India's preeminent national industry body to strengthen the space of impact investing in India. We were set up almost 10 years back, 2014 to be precise. And we are a Section 8 not-for-profit company. And presently we have 50 plus, in fact, 55 members and ecosystem partners. The IIC's goal is very simple. It's a simple one-line thing, which is really to encourage private capital to bridge the social investment gap in India. And obviously the sectors all across financial inclusion, climate, education, agriculture, etc. So our job is really to encourage private capital to build the narrative for impact investing as a viable investment opportunity in the country, engage with the government and other regulators, and leverage thought-based leadership to support the growth of the sector. So that is really what we do. We work across a variety of sectors, whether it is equity impact investing, whether it is debt impact investing, blended finance, climate tech investing. It is our aspiration this year to build a gender lens index for the impact portfolios, which really provides a sense of direction in terms of how we are doing as far as inclusivity in gender-backed investing goes. At this point of time, we have very little information or visibility around, are we getting better or are we getting worse? Which sectors need greater support? Where are the interventions most relevant? And we would like at least this year that we publish, some specific quantitative analytics around how we are doing, which we can do on an annual basis. So these are some of the things. Clearly, the other two areas we work on is mobilizing capital for impact. And one of the areas we want to focus on, as Manav said a lot more, is around the whole space of impact measurement and management. And how do you really, if I may say, align a variety of models of impact measurement and management that are followed by a variety of players and kind of provide a much sharper and cleaner narrative in terms of the social impact that the organizations are creating. Let's move on. Okay, just a quick, brief on the IIC members and partners. As I said, we have about 55 plus members. It's a nice mix between
I think Ramraj has must have dropped off the net. So basically what you see on the screen is a little brief on the kind of members that IIC works with. So this is a mix of different kinds of entities. There are asset managers, there are foundations, and overall basically ecosystem players who are working to build the impact investing ecosystem in India. Because what we really understand through our experience is that it's only through a collaboration of all these different players that one can really work towards strengthening the system, which is now seeing a lot of traction and interest. So with that, let's move on to understanding what is it that's happening under the research pillar. So basically, like you can see on the screen, IIC works basically to understand research and understand the trends and everything that's happening in impact enterprises by way of equity investments, debt investments, what are the blended finance structures that India has been seeing, what is really happening in climate tech investing and gender lens investing. These are some of the key areas of focus, like Manav also pointed out in his keynote, that India is really now starting to see traction on. So what you would really find under IIC's research domain are first of its kind industry research reports that give you a very granular understanding as well as a complete landscape note of what really is happening in these spaces in India.
Yeah, Divya, sorry, I just got disconnected. I'm back now. Sorry about that. But
no worries.
Please go ahead. You finish this slide. You finish this slide and I'll take up the next one.
Sure. So as you can see, there is a database that IIC works on, which captures all the research data that we have put together. This will help you understand trends across sectors. what are the kind of deals that are getting funding, at what stages are enterprises getting funding, what is the profiling of investors, how much is commercial investment coming in, how much is non-commercial investment coming in. So basically across the 6 impact sectors that we mentioned about, this is the database that has a collation of more than 800 enterprises, which we have tried and analyzed for the last more than a decade. So with that kind of a base, what you'll be seeing next are the findings from the same research analysis that we've been carrying out. So
Yeah,
Ramraj,
before we move to the next slide, I just thought maybe I can just give a little bit more color. So essentially, this is the data set that we've built over the last 7 to 8 years. It essentially covers, a variety of companies across impact sectors. We collect data on a weekly or a fortnightly basis. We collect pretty much the entire VC data. We use a variety of impact filters to filter out companies which are impactful. We then track those companies both from a cap table perspective, from the social impact perspective, from a variety of sources, and essentially, sort of monitor and track this portfolio from time to time for a variety of reports, one of which is the one that you are, looking at this particular point. So, so that forms the heart of a lot of the research that we did. I think someone asked the question that is this a public data? No, this is not a publicly available data. This is something that we've built up at the IIC as a part of the data set. In fact, we've taken the help of a lot of our partners also to, where they help us, our members who give us this data and make that available. Soon, this information is going to cover not just equity. We will be also in the next few weeks releasing a database on blended finance transaction in India. That's a story for another day. But yes, clearly one of the aspirations for IIC is to be the repository of reasonable quality data. As you know, there is no public data in this in terms of public nomenclature or established nomenclature. So nomenclature is something that we built ourselves. But the whole idea is for this information to be kind of made available. Okay. Let's just move on to the slide before I hand over to Varun and Vedant. Okay, here are high-level highlights of the report. I'm just going to do a 50,000 feet analytics, and then Varun and Vedant will give you more detail. So the report essentially showcases that this year we had almost about $6 billion, which were mobilized into impact enterprises. So just to be clear, this is the money which is mobilized into the enterprises. This could have been mobilized from commercial sources, or it could have been mobilized by impact from impact investors, impact funds, and so on and so forth. But fundamentally, we had about 375 unique impact enterprises, which across about 420 deals raised this $6 billion. As you can see in the chart on the left, there are a variety of sectors which are raising this money. But clearly, if I may say, climate tech sector is a sector which has seen, the most interest, the most action, if I may say, during this year. It has showcased, or it has logged in the largest growth rate vis-a-vis investments last year. As you can see in the data on the left, climate tech related companies have raised upwards of $1.2 billion. If I look at some of the other sectors, financial inclusion, old favorite, continues to be one of the leading sectors, possibly the sector which raised the maximum amount of money. Tech for good companies, continue to also, raise a lot of money. Agriculture has been a sector which has seen increased interest in recent times. The sector, obviously, which has, if I may say, witnessed somewhat lower levels of interest, which is reflected in terms of the funding, is education, which is just about 423 million. So that's the kind of mix, and we'll obviously talk a lot more in detail in the next few slides. Last point is in terms of funding for women enterprises. So out of these 375 unique enterprises, about 71 of them were co-founded or founded only by women. These organizations have raised about $1 billion, 0.8 to be specific, in equity capital. So that's a kind of high level sense of the size and scale of the sector, the number of companies, and how the things have been distributed, in terms of the numbers. I'm going to stop here. And I'm going to hand over to Vedant. But before I do that, I'm also seeing a lot of questions related to the specific sectors. And I'd urge everyone to please hold your horses, because a lot of these questions are going to be answered over the next few slides. And if some of them are not, then we will try and take them up. With that quick summary, I'm going to hand over back to Vedant and Varun to take this forward.
Thank you so much, Ramraj, for the high-level summary. Now, just building upon the insights that you provided us and diving deeper into some of the investment level overviews, we see that 2022 was a year of recalibration and also consolidation for impact investments in India. And this was largely due to the tightened VC funding environment that we saw not only in India, but also globally. And this was sort of complemented by the global economic slowdown too. In fact, if everyone takes a look at the screen and the chart that's at your bottom right, you'll see that both the deal flow and also the total investment amount actually peaked in Q4 of the calendar year of 2021. And since then, we've sort of seen a gradual decline in both, the investment amounts and also the number of deals. And there are signs of like bottoming out in Q4 2022. So hopefully we see a turnaround this year. Another interesting point that we sort of get is that, the total investment amount, as Ramraj has also said, has declined this year. So it went down from around 6.8 billion in 2021, which was an all-time high, to around 5.8 billion this year. And this was largely due to, fewer big ticket deals. That's deals greater than 100 millions in the later stages. And this was also, a result of the broader slowdown. However, interestingly, the total number of deals actually were higher in 2022 as opposed to sort of 21 or even 2020. And this was largely due to, a very strong seed stage or ticket investment environment. We saw a lot of seed stage enterprises get funded for the first time, which is always a good thing. Next slide, please. Now, moving on to the stage-wise analysis, just reiterating some of the points that I said earlier, we saw a substantial rise in seed stage transactions. In fact, you guys can see a sort of time series analysis to the right of the chart that's on your screen. So you see that, seed stage has done well, both in terms of the number of deals, but also in terms of the total amount that was invested into them. And this is a good sign because, it highlights the robust innovation potential that even during a time of, lower funding, you're still seeing new business models getting funded by impact investors. Another interesting point that comes across is that, we're seeing that the ecosystem as a whole is gradually maturing to the growth stages. And this is sort of reflected in the consistent rise in Series B transactions that we've seen, and also the total amount invested into Series B enterprises, since 2020. However, like once again, just reiterating the point that late stage deals fell sharply. And this was once again due to the tighter funding environment that we saw in 2022. Next slide, please. So on this screen, you can effectively see, time series for the investments and also, the number of transactions across sectors since 2020. And, what we see is that the investment momentum has largely deaccelerated in 2022, except in the climate tech and the technology for development sectors. In fact, climate tech in particular has emerged as a powerful catalyst for the overall investment momentum. It's the only sector that has now shown consistent and robust growth in both the deal flow and also the investment volume since 2020. And in 2022, 1 in every 3 impact investment was made into a climate tech startup. So that's a very big thing because financial inclusion has been the traditional, heavyweight of India's impact investing sector. And it just shows that more and more investors, are willing to put money into business models that focus on climate change adaptation, mitigation, or even resilience. Similarly, the technology for development sector has also seen, a lot of sort of growth this year. And this is largely due to, proliferation in business models that are focused on, underserved populations in rural regions. This can be through social commerce models, let's say vernacular regional media content for the various languages and regions in India, and also technology that sort of empowers small and medium enterprises. The education sector in particular, had a very bad 2022, and this is something that even Ramraj spoke about earlier. And it just kind of reflects, the broader challenges that we're seeing coming across in the education sector, particularly when it comes to the viability of digital learning models, in a post-COVID environment when students start going back to school and they're not leveraging technology perhaps in the same way as they were during the pandemic. Next slide, please. Now the healthcare, financial inclusion, agriculture sector saw slowing growth momentum, in contrast to the healthy capital flows that they've seen in the prior years. The healthcare sector in particular, when it comes to the total amount that is invested, took a big hit. As you can see on your screens, it fell by more than 50%. And this was largely because in 2021, we saw a number of big ticket investments into healthcare focused enterprises in the later stages, such as Pharmacy, etc. But that kind of deal flow and transaction volume was just absent for this sector in 2022. Lastly, a key promising trend that we sort of seen across sectors is that deep tech models, the IP-driven deep tech models, are gradually coming to the fore, and more investors are putting money in them, and they're increasingly prominent even in the data sets that we sort of analyze. And this is cross-sectoral. So in healthcare, for example, we're seeing a lot of investments into deep tech startups that are focused on affordable genomics, for example, MedGenome. The climate tech space is also seeing similar intention with more innovative deep tech driven models coming to the fore. So this brings us to the end of the sectoral overview, and now I'd like to hand it over to Varun to take you through the rest of the presentation. Thank you.
Thank you, Vedant, for the sector insights. Let's now move on to the investor analysis, where we analyze the composition of investors in the Indian impact investing ecosystem. If you observe the chart on your right, we'll notice an increase in the number of investment by commercial investors in the year 22. But following the larger, broader market trend, as Ramraj and Vedant pointed out, the increase in the number of deals has not resulted in a proportional rise in the volumes. But the larger trend that we are noticing is the increasing volume of investment by the impact investors, while the volume of commercial investors has declined. It is largely in the later stages that we witness impact investors showing greater resilience. Moving forward, we can also witness the growing presence of impact investors in the club deals as well. If you observe the chart on top right, these club deals, which are co-investments between impact investors and commercial investors, have doubled since 2020. This is largely because of the increasing participation of impact investors to co-invest and create social impact at scale. Another interesting trend that we witnessed this year is the surge in funding from impact investors in seed and Series B stages, indicating the increasing involvement in early and growth stage investments. Can we now move on to the next slide, please? Great. Now we'll be taking a broader look at gender lens investing and the top funded sustainable development goals. Before delving into the numbers, it is essential for me to explain how we analyze the sectors through a gender lens. At IIC, one of the key metrics that we use is whether the business is co-founded by a woman entrepreneur or not. This is largely the metric, and by no means are we saying that it is comprehensive from a gender lens investing perspective, but it is our larger aspiration only to build a gender lens index for the impact enterprises in India. Now let's look at the numbers. If you look at the table below, you observe a sharp increase in the number of women co-founded impact enterprises being funded. While the absolute numbers has increased, the overall proportion of women co-founded enterprises to the total impact investments has remained fairly constant after adjusting for a large one-off deal of an enterprise called Off Business in 21. And hence, by and large, we aren't making any significant progress. Now let's move on to the SDGs. It is a well-known fact for all of us that for India to achieve the SDGs by 2030, we need to spend approximately $170 billion annually. And this by far can only be achieved with the increasing participation from the private capital providers. Now, to end on a positive note, our analysis at IIC indicates the $6 billion raised by the Indian tech-driven impact enterprises in 22 directly contributes to multiple SDGs. Impact investing in India has mobilized significant proportion of funding towards SDG 8, which is decent work and economic growth, SDG 9, which focuses on industry innovation and infrastructure, and SDG 10, which is reduce inequality. Impact investing in India has mobilized significant proportion of funding towards SDGs by directly supporting early stage, tech-driven enterprises deploying innovative solutions across various subsectors. With this, I would like to conclude and request Ramraj to take it forward for the summary.
Thank you all, and my apologies. I kind of fell off the radar for a couple of minutes, and thanks Divya for sort of stepping in for me. So here's a quick summary, a quick sort of concluding summary of what we saw in 2022. So I'd like to really think about 2022 as a little bit of a year of consolidation for impact investments in India. Obviously the tightened VC funding environment, global slowdown is there, but I also think that there is some broader sort of a pause in terms of also looking at the business models, sharpening the business models, and thinking through how scale and profitability can be balanced out, and we see a lot of those kind of trends. Clearly, as Vedant mentioned, the total investment amounts have declined. But interestingly, the number of early stage deals continues to grow at about 35-40%. So what we are seeing is a 15 to 20% decline in overall impact investing volumes, but a 35% increase in the number of seed stage deals. So just logically speaking, what this means is effectively that lots of large ticket late stage deals, which was a pretty central theme of 2021, is not that market, and that time of life is over. So we are seeing fewer late stage large ticket deals, but the energy and the enthusiasm and the innovation potential for social impact at early stages continues to be very, very robust. As I said, climate tech emerged as a major catalyst. Education sector suffered due to some of the challenges. We'll speak about this a bit more later. I think what is also interesting is that, yes, while the overall investment volumes have dropped, what if you see the breakup between commercial and impact investors, a large part of the drop is actually attributed to the commercial funding. Impact investors, or investments from pure play impact investors, has actually grown slightly. And this we can obviously pick up from the cap tables of each individual transaction, and then transaction to transaction, we can kind of add it up. That is how we do it. What's also interesting is historically impact investors used to be focused on the very early stage, seed stage, Series A kind of thing. But increasingly, we see many impact investors take larger bets. We are today seeing funds which are focused on growth stage. We are also seeing some funds which are with some of their very high quality companies taking later stage bets of slightly larger sizes, which is again a very different sign. So these are, if I may say, a quick high level summary of what all we wanted to kind of cover, and I think these are some of the conclusions. I'm going to just stop here now. And I think there have been lots of, requests, Divya, for how to download the report and so on. So maybe I'm going to just hand over to you, and you can talk briefly about how people can download the report and so on before we move on to the investor panel and things like that. Over to you, Divya.
Sure. Thanks, Ramraj, Vedant, Varun. There are a lot of interesting insights that have come out from this report. And as you all can see, 2022 seems to have brought out with it something very new and interesting for us to now understand going forward. I can see the questions regarding where we can access the report. So you all can do it at the link which you can see on the screen. It has also been shared with you in the chat.